I'm very bullish on Bitcoin in the long term and even in the short term due to the demand by the ETFs. We have this left translated cycle where we actually see an all-time high even before the halving, which we can also see here in this chart. But just to show why that isn't that strange is if we look at actually most indicators, so also just even technical analysis indicators like the RSI, but also on-chain indicators, we can actually see that the April top was actually the top made in the indicators rather than the November top. So here we're looking at the MVRV. It's another fundamental on-chain indicator. So you can see these blue vertical lines, those align with actually the tops of that indicator for that particular cycle. If you look at then the time from that April 21 peak towards the current all-time high, it's actually of similar magnitude to the previous halving. As well to the previous cycle. The MVRV, it compares the market value against the realized value. Now, what is the realized value? That is the actual capital inflow into Bitcoin. So we can look at all the transactions of the blockchain, and the combined inflow of all those transactions is the inflow. So that's the realized cap, and the market cap is the price times the supply. So what we're actually looking at in this bottom indicator is the distance from the realized price, which we actually can see here in the chart. So here I plotted the price with the realized price. So it's the price with the average purchase price. That dotted blue line is the average purchase price of all Bitcoin. And so we look at the distance from that average price, or how much price is above that average purchase price. And so obviously when price starts moving up fast, making new all-time highs, you get further above the average purchase price because there's a lot of inflow of new people buying higher prices if this indicator is high, and then we fall even below zero during this bottom formation. And currently we're of similar magnitude to the 2019 rally that we had. So one could argue like, oh, maybe we'll have a similar event towards this 2019 rally. But the difference this time is that we actually see sustained demand from the ETFs. And so I expect the rally to continue rather than to dissolve, which we had in 2019. So the left translated cycle, meaning that we'll have an all-time high earlier than previous cycle. I align the cycles from cycle peaks, except I used for the past cycle, I used the April top rather than the November cycle peak, which you can see here. And then if we do that, we can see that we're actually really in line and we're actually following the path of the previous cycle where we are now. It's not that strange that we have an all-time high before the halving. And then I wanted to get to the hodler behavior. So here I have two different ways of measuring the hodl behavior on chain. And one is long-term holder supply, and the other one is illiquid supply. So one is time-based, which is long-term holder supply. So if a coin is older than 5 months, it becomes part of the long-term holders. Whereas the illiquid supply, it's not time-based. It looks actually at spending behavior. If an entity on chain spends more than 25% of their holdings, they are considered liquid. And if we spend less than 25% of the holdings, it's considered an illiquid entity. Because the time-based variant, as soon as a long-term holder sells their coin to a short-term holder, it actually takes a 5-month period before that short-term holder can become a long-term holder. And so you have these downturns in long-term holder supply. There was never a moment in history that was better for selling than that all-time high. Until that day, we see that long-term holders with these gigantic profits, obviously they do sell off some of their coins. And actually in 2017, we saw a drawdown of nearly 3 million coins in long-term holder supply. But obviously that is bought up by short-term holders. This is not the supply on exchanges. This is actually the supply that moves on chain. We have these downturns because of high price increases. High price increases incentivize selling a portion of the Bitcoin. The reason why we do not see that in illiquid supply is because if someone that has a long-term hold, like a hodler that has illiquid coins, if they sell a bit of their portion, less than 25%, they remain illiquid. And the person buying that is actually by default illiquid until they start spending more than 25% of their holdings. That's why illiquid supply just doesn't show the same volatility. But in the end, we have these downturns in the bull market. Again, these lines start to align. And we see that current position of these line is only less than 500,000 Bitcoin apart. So they're very similar. And they can move up in the same fashion, except that the long-term holder supply has a lot more volatility due to being a time-based variant. But this shows me that the behavior, the trend of the hodlers is that supply is generally getting more illiquid.
So all-time highs are a good opportunity to redistribute coins to new hodlers.
Exactly. It just happens naturally. If you're up 250% on your portfolio, people tend to take some profits. No one has ever gotten poor by taking some profits. And so it's normal that this happens. That is also to be expected, again, this similar behavior in the next bull market. We have had an inflection point in the third halving where illiquid supply is outpacing the new supply issuance. So we've had illiquid supply, the growth rate was about 1,400 coins a day on average, whereas the new coins that were added to the network were only 900 or 910 coins a day on average. Then we will have a 450 inflow in the circulating, like in supply issuance, and we will see what the growth rate will be of the illiquid supply. I think it's going to put upwards pressure. So the interesting thing here is that if we look at the supply issuance in the first halving, or even pre-halving one, we had about 7,500 coins added per day to the network. After the first halving, there was a reduction. That amount more or less got halved. And so we have only 3,900 coins a day that were added to the network. The reduction that we see here is similar to the demand of the current ETFs. Approval. There's a difference between a true supply shock caused by the protocol, which is just there's more volatility and fluctuations with the ETF approval, and it's part of the demand, which can change over time. So it's not the same thing, but still the magnitude that we're seeing from this supply crunch that we're currently having is of that magnitude of the first halving, which I think is really incredible. So this is the conservative variant of the HODL model where we try to map the growth of illiquid supply. And so this is a very conservative measurement. So we see here the total supply, the illiquid part, and then the HODL model, which kind of maps this into the future. And the bottom part of the chart is the same thing, but in percentage terms. How much percent of the supply is illiquid? And so we start out very high with 100% illiquid. And we move down towards 70% of the supply being illiquid at the inflection point, which is the highest amount of available supply for trade, which is that the orange supply that is here. And we've actually started to move back up significant, even faster than this conservative model. So if our measurements are correct, Bitcoin is becoming more scarce since the third halving. And so that's going to put upward pressure on price, and ETF demand will as well. I think we're up for a bull market. This was the conservative model. But then if we look at the HODL model S, which is a lot more bullish, here we just go from 100% to 70% back to 100% at a more or less equal pace. Currently, we're still above that model value. And so we've had a bit of a downturn recently in illiquid supply. And that was actually exactly with the FTX sell-off. I actually think there were some wallets that became liquid suddenly because of spending more than 25% of holdings or due to the ETF approval. So there we saw a bit of a change in liquid supply. But since then, we've been moving back up again. So I think this trend will continue. So that means available supply for trade is shrinking. And so Bitcoin is becoming more scarce, which will put more pressure on price into the future. And so price is going to move up faster. For me, it's just a very bullish outlook. To get to the next chart, if we look at the available supply for trade since the third halving, we've been moving down. So my expectation is that we will be somewhere between the S model and the normal HODL model. And with this chart, this is the on-chain value map. And this actually incorporates a bit of the available supply for trade after the 21 cycle top, and we've made a bottom since, and we're moving up, and we can see now that we are at this overvalued level, which obviously happens in bull markets. But I just wanted to point out that like every cycle we have actually been at that overvalued level before the halving as well. I mean, we have seen an all-time high now before the halving. If you take into account that the previous cycle top was a distribution top in 2021, and also that the supply was the most abundant in Bitcoin's history around that third halving, it is not that strange to now make an all-time high. A 30% correction, that would be a correction of the magnitude I'm talking about. That would actually be a healthy reset. We haven't had a correction since 40K. And so we're actually due for a correction, but the ETF demand is just eating up all that supply. And so it doesn't allow for any correction really to occur yet. So it will be interesting to see that in the coming weeks, how that will play out.